It's not K. Srinivasav, it's from Dr. Farid Ahmed. It is on an SME, MSME.
And to share the insights on this very crucial topic, we are truly privileged to have with us a stalwart of the banking industry.
You are all aware, MSMEs plays a very, very important role in the socio-economic development of. So micro and small medium enterprises are the backbone of Indian economy, playing a pivotal role in driving economic growth and development. These enterprises form the foundation of various industries and contribute significantly, as I said, to the employment generation, export promotion, and also improving the innovation. These figures highlights the sector's pivotal role in driving economic growth and stability. Small enterprises, 25 crores investment, 100 crores turnover should be allocated to priority sector. Under priority sector, a sub-target of 7.5% of ANBC or CUOBE, whichever is higher, is allocated towards the micro enterprises under overall priority sector lending. Banks are advised to achieve 20% year-on-year growth in credit to micro and small enterprises and made it mandatory to not to accept collateral security in case of loans up to 10 lakhs extended to MSME sector. Or further, it is advised banks may, on the basis of good track record and financial position of the MSME units, increase the limit to dispense the collateral requirement because most of them will come under the regulatory return up to a limit of about 7.5 crores. These are the key drivers pushing the growth of MSME lending today. As MSMEs grow and look for short-term liquidity to support working capital needs, they require more customized solutions. So there is a growing demand for working capital. And this demand is met not only by traditional banks, but also by the NBFCs and alternative lenders who specialize in quick and so finally, financial literacy and awareness is improving. Capacity building programs and outreach help small businesses and MSMEs creating a larger and more engaged borrower base. So what are the concerns of MSMEs? Inadequate industrial infrastructure, facilities like power, water, road. Policy and regulation concerns are high regulatory compliance burden, lack of quality control standards, difficulties in existing market, managerial problems, sole proprietors and partnerships, because about 95% of the MSME enterprises are a proprietorship or partnership. Finance very proactively, though the banks have and other non-banking financial institutions contributed to about 33 lakh crore finance to the MSMEs in India. Comparatively high NPA, indicating the high credit risk, lack of transparency of the financials or the non-availability of the financial information of the MSMEs, lack of third-party rating, lack of financial discipline. Very, very, they are very, very succumb to diversion of the funds to personal needs like property purchase, consumption, and social functions, and also diversion of short-term funds to long-term business needs. So these are the concerns causing banks 49.58 crores, constituting about 47+% is non-addressable due to several factors like sick and redundant enterprises or the presence of new enterprises that have limited operational history or enterprises that voluntarily exclude themselves from formal financial services. And the total credit gap still estimated is about 23.5 lakh crores. So there is a great potentiality and opportunity to finance the MSMEs. No doubt, public sector banks continue to dominate loans to the micro enterprises, holding about 46% of the total The micro and small enterprises account for 95% of the current accounts remittance flows to spot credit-worthy SMEs with a strong financial activity. Our savings accounts of the individual businessman to offer instant working capital credit to micro units. Deployed MSME desks in industrial estates across Gujarat, tripling the MSME business in 2 years. Partner with the fintechs, marketplaces, and anchors. Collaborate with the e-commerce platforms, supply chain aggregators, and POS vendors. Use anchor performance to de-risk lending and track MSME payment cycles. One of the large private sector banks uses customer profiling tools to cross-sell MSME loans to retail business account holders. The qualitative MSMEs is not just sanction of the loan, disbursement of the credit, but becoming the MSME growth partners, qualitative SME clients. Then coming to the lending practices, that is leveraging GST returns, utility bills, digital transactions, e-commerce sales data, and bank account flows to assess the creditworthiness as a proxy indicators of the business credibility. Dynamic credit monitoring systems, collateral light lending via guarantees, that is pre-approved loan offers based on existing account behavior, digital onboarding and eKYC, straight-through processing using the rule-based credit engines for standard cases, GST bank statement and IT returns, APIs for the instant financial data validation. So these are certain strategies to accelerate loans processing and disbursement, improving the quality of the attracting the MSMEs and are enhancing the credit assessment techniques. So traditional lending approaches were based upon the relationship banking and personal guarantees, collateral based lending, trade credit and supplier finance. But now we have to find out innovative financial solutions, digital lending, invoice financing and factoring, NBFC and fintech models, or cash credit, overdraft, bill discounting, term loans, channel financing, dealer financing, and vendor financing, online financing. I am not going into the deep. However, the dealer financing deals with the provision for financing receivables of the vendors of well-known corporates and industry majors with whom the bank has entered into the tie-up, loan offerings and reach out to MSMEs through partnership with the e-commerce. They used to have 37, 38%, increase it to around 40% of term micro businesses are availing the term loans, indicating that useful for retail trade MSMEs, consistent scam-based payments show actual turnover, consistent scan-based, transaction-based lending models, invoice discounting, purchase order finance, and supply chain financing reduce risk by tying the credit to cash converting events. These models rely on actual business transactions, which is common in fintech-led lending and now being adopted by some of the agile NBFCs and few public sector banks also. Cash flow based lending tells us whether the business together they form backbone of a modern, inclusive and scalable lending. So whenever we are financing to the MSMEs, another point we have to keep in mind is the growing MSMEs need structured term loans, asset financing and trade credit solution to support the expansion. Digital lending has enabled faster access to the credit-based and cash flow analytics rather than collateral-based assessments in the past few years. It is required to adjust traditional financing choices along with the innovative financing methods. So, innovative financing models for sustainable MSME growth that aligns the interest of the investors and MSMEs by linking repayment to the company's revenue. This gives the flexibility. So flexibility in repayment, alignment of interests, access for early stage businesses. So revenue based financing is often more accessible for startups and early stage MSMEs that may not qualify for traditional. There is a rise in the digital finance models for MSME lending. The new models are disrupting the ways enterprises are assessed for credit risk and presenting the new methods of financing them. So MSME fintechs, they are broadly classified into 5 categories: marketplace lending, balance sheet lending, do not have the collateral, which is generally requested by the traditional institutions, can borrow using fintech lending form, that is marketplace. They apply for loans. The platform will do the risk scoring and pairing the borrowers with the investors who are willing to invest along with the regular credit appraisal parameters. These platforms usually develop proprietary algorithms that analyze consume. Then balance sheet lending, unlike marketplace lending, they lend to the borrowers directly from their own capital base, taking credit risk themselves. They disburse directly, not as an intermediary. They are able to offer revolving lines of credit with more flexible terms to the borrowers. Hybrid models allow for the platform to determine creditworthiness of a borrower, subsequently find the best lender in the marketplace for the borrower. Model tailored to solve the specific pain point of the MSME delayed payments. You are all aware, few purchasers or the large purchases, they delay the payment to the. So the alternate lending models have arisen that are able to finance enterprises with the short-term working capital upfront within a matter of days or even hours based on the verified invoice. This invoice lending trades is one of the examples. Invoice financing. Online receivable finance companies allow MSMEs to monetize their invoices. And supply chain finance, it is also like a short-term finance. Third party based upon the assessment of the, so mainly technology. Offering information data to lenders and borrowers. MSME financing processes. By automating the long processes, lenders can free up staff members' attention for more important duties. Many MSMEs need help understanding financial procedures and finding the paperwork involved in traditional loan applications, which is tough and time consuming for them. So fintech platforms, they will it is automatic loan processes is possible by solid digital public infrastructure and credit-linked capital subsidy and benefits in the tenders. All these are the certain. You have to closely monitor the accounts, closely monitor the due diligence, identification by the borrower enterprise. An FSME borrower may have voluntarily initiated the proceedings. To this framework, when such request is received by the lender, the account with aggregated loan limits above 10 lakhs should be referred to committee. The proposal referred. In case of consortium and banking, multiple banking, joint lenders forum agreement must have to be entered. That is latest audited statement, details of the liabilities of enterprise, nature of stress faced by the enterprise, suggested remedial measures. So committee within 15 days, working days receipt. Within 30 days of convening the first meeting for specific enterprise, the committee shall take the decision. Restructuring, considering the possibility of the restructuring the account, if it is prima facie viable and the borrower is not a willful defaulter, managing risk is a critical aspect of MSME lending. So proactive measures for effective credit risk management is put in place early warning signals, declining account turnovers, return checks, etc. As we discussed, early warnings. Act early, offer restructuring, top-up loans, credit counseling before borrower slips to default. Then responsible lending. the RBI has taken proactive measures to implement regulations that strengthen the credit ecosystem. So as a responsible lenders, we must comply with these guidelines and contribute to the overall stability of the framework. So to effectively manage credit risk, it is essentially to work collaboratively and incorporate technological advancements by addressing the obstacles faced by the MSMEs and closing the credit gap. We can able to enable these businesses to flourish and make so future growth, future scope for the growth of MSMEs in India is looking promising. The continuous focus on the skill development and infrastructure improvement by the government will further accelerate the growth of MSMEs. However, the government could help small and medium enterprises by focusing specifically on three: development of the MSME, production of the products of the MSME, financial assistance to be obtained from the financial institutions, and marketing of the products. All these areas, these people, associations of the MSMEs, consultants, independent consultants, all they can play very, very important role. Then competitiveness, create a globally competitive SME pool by providing the required business support infrastructure.
And stage of recovery and as well as risk management in SME lending, and what are the key drivers for MSME lending? How can banks attract quality of SME lending, and what challenges do MSMEs face in getting loans?
Now, I think the various export promotion councils have created the platform where MSMEs can really pull up.
Now, I did a very comprehensive presentation on this MSME financing, but the labor cost has gone up so much. That's why this MSME sector is gradually receding. They are a big industry or medium and big industries. They depend on this MSME. So how this manufacturing sector is contributing hardly say 15% of GDP. How MSME is contributing 30% of GDP. So MSME sector is growing also in the services sector. And what actually I wanted to emphasize is government is now providing opportunities for long-term finance to this MSME. This alternative AIF, alternative investment funds, private equity, then venture capital, angel funds. So many opportunities are now available. Alternative investment fund, they can provide long-term capital. So long-term capital and this working capital, both type of financing is required for this MSME. The only thing the people or the MSME promoters should come out of this, post-independence mindset of pocketing the fiscal incentive. So this is the true story of MSME in India. Opportunities are many. Government has come out with a large number of incentive scheme, PLI scheme, ELI scheme, Mudra. Finance is not a constraint. Of course, the cost of credit is high because generally our cost of credit is high compared to many other countries. So these are some of the observations which I feel from the academic point of view, there is a need for state governments to also provide support to the MSME, and the MSME entrepreneurs should come out of the mindset of pocketing only incentive, not growing in the process.
In financing the MSMEs, though we have also started and doing in a smaller way, some of the banks have started thanks to the ease reforms. Because of that, we have STP has been implemented for the MSMEs, and other technological digitization has been done in the public sector banks also. However, the private sector is a little ahead of us even in the absolute total outstanding credit to the MSME as in first half year of the financial year 2025 by about 80,000 to 1 lakh crores above our figure. Aggressively for mobilization of the proposals and also for preparation of the proposals, basic appraisal of the proposals, and for doing the due diligence, everything. We are doing to some extent of due diligence and all, but still the public sector banks are not habituated to entertain the consultants for MSME finance.
Our branch managers are not comfortable financing when they don't see any collateral. Event-based financing, things like that, they have to come up now.
The collateral-free loans supported by the credit guarantee schemes, which will be helpful to improve the MSME credit growth in the Indian conditions.
My question is that as I have worked in field in MSME lending and collections, what I have observed that when the initial sickness arises in an account, say SMA 0, SMA 1, there is no proper hand holding to borrowers. We as a banker put pressure to get account standard to borrowers, but we are not properly hand holding them, not educating them to get out of the situation and avoid reoccurrence of the situation. At that stage, what I feel, we lack that support to MSME borrowers. So what can we do to change this scenario in our banking industry so that this can flourish like anything in future, sir?
Powers to support the MSME as per the framework of Reserve Bank of India. What we focus is always after disbursement of the loan, we are more interested to recover the loan. That mindset has to change. We have to think. Even IBC says for big loans, we have to recover our amount. But sometimes when genuine MSMEs or any other borrower is in problem, stress, we have to find out the resolution. So unless until we take care of while assessing the proposal, the cash flow, so we have to change. Even though Reserve Bank of India in SHGs itself, they have put minimum fortnight.
Sir, you were talking about this cash flow based lending, and nowadays we are also listening this word. Just want to know what exactly is this cash flow based lending, sir?
And also to it, add some minimum amount of cash in hand for the unit. That is the ultimately working MP maximum permissible finance and monitored by the repayment. Or if it is shortfall, the bank has to provide as a working capital limits.
Sir, I had worked as a branch manager in Srinagar branch for last 3 years and 4 months. In that, what I understand is that, sir, we finance, being a public sector bank, we finance.
And the loan is coming regularly, you will not meet the borrower at all. Is it not? Practically. Generally, MSME overdue borrowers will meet more than the regular borrowers. Plus, you have to advise them. Suppose a housing loan borrower is coming. An example, housing loan borrower is coming to you as a branch manager and asking for 50 lakh loans, 800 per lakh, and take for 25,000. You have given a loan, you are a good manager and you have sanctioned very promptly and all. Ego bhai, for an employee, salaried person, taking loan beyond 15 years is not advisable. That it should be closed in 15 years, 50,000 per month, because the difference between the installment is only 10,000, but you have to pay 10 years more if you are taking 25 years. Total interest outgo will be this much more. This HDFC and other private banks, they are very, very competitive as far as the MSMEs are concerned.
I don't see any more questions coming. So friends, we come to the end of today's very enlightening session. Thank you, sir, for sharing your profound knowledge and invaluable experience with all of us today. To join the Elite Bankers Club, you will save on costs with complimentary access to all future events, and more importantly,